because it has gone so big, there might be a need for regulation. People don't know how to regulate it yet because it's not really a fiat currency. So who regulates it? The Fed. It's not really a security. So what does the SEC have to do with it? But there's a lot of gray area and there's still risk of the government stepping in. Hey guys, so in this video, I want to talk about stablecoins. What are they? Should you actually get into them? And what are the uses for it? And what's the value of it? So to make it super simple on what stablecoins are, just by going through its name, stable, it's basically a cryptocurrency, but it's pegged to another fiat currency like the US dollar or the euro, or it's backed by other cryptocurrencies as well, or it's also backed by some algorithms that's trying to maintain its price stability. To get the whole context on what stablecoins are, it's basically, it maintains its actual value, pegging it to the US dollar. Meaning, if you look at Bitcoin, Bitcoin is one of the greatest cryptocurrencies ever. Ethereum also is one of the greatest ever. However, Bitcoin may be regarded as safe, Bitcoin may be regarded as apex digital property, but it's still volatile. Meaning, if you look at it, at some point in 2018, Bitcoin was around 3,000 US dollars. If you look at it at some point in 2020, it was around 5,000 US dollars. At some point this year, it hit 64,000 US dollars. Then it dropped to 28,000. Then it went to as high as 69,000 US dollars. That being said, the technology and the value is very sound, but the price changes and fluctuates on a second per second basis. When I started out, the entry point for a lot of people to go into other altcoins was Bitcoin. Then you use Bitcoin to buy other altcoins. The problem with that also though is that, okay, what if there's a market correction? What if you already started earlier and then you don't want to leave the cryptocurrency market, but you don't want to get hit by the volatility, especially if you entered in 2018 where prices were lower, you entered in 2020 where prices were lower, and then you want to ride it up, it's starting to reverse, but you don't want to return it back to fiat. What stablecoins will do is it's an area where after, for example, you move Bitcoin to a certain stablecoin, should the price of Bitcoin up against the US dollar go down, you won't get hit. The value of your portfolio won't be affected as much versus if you rode Bitcoin in its entirety. So what's the biggest use of stablecoins in my opinion? Number one, it's a take profit mechanism. It allows you to take profits off the table, especially if there's a parabolic move, especially if you don't want to get battered by any sell downs later on, or in the same way, if you want a protection from volatility, that you bought something but there might be FUD, there might be bad news causing a lot of people to stay out and be on the sidelines, and there's a lot of uncertainty. If you don't want to get hit by all of that, you can shift and transfer and convert your altcoins or even Bitcoin all the way back stablecoins to protect you from it. So stablecoins basically give you stability. So what are some of the top stablecoins? You have USDT or Tether, which is the largest in terms of market cap. Then you have USDC, which is the second largest in terms of market cap. If you try to look at Tether, it has a distribution of reserves that somehow gives it value because it backs up whatever US dollar equivalent it actually has. So if you look at Tether, it has commercial papers valued around 30 billion. It has cash and bank deposits valued at 6.28 million. It has repo notes. It has treasury bills valued at 15 billion. It may seem that they're stable. It may seem that they don't have volatility, but if you try to analyze it also, the fact that they have debt, there's still also a possibility that what if those debts default? I'm not saying they will default, I'm not saying it's not safe, but what I'm saying is there's still that risk. So when you try to look at it, Bitcoin does not have that risk of default. It's just that it's volatile. Stablecoins, they have that risk. They're not volatile, but they have that risk because the underlying assets that are attached to it also have the possibility of default. So USDT is the largest one, USDC is the second largest one, then you have BUSD as well. What's interesting is the next two. You have DAI, which is also considered a stable coin, but what's interesting about DAI is that what backs it up is not fiat. What backs it up is not commercial paper or debt. What backs it up is other cryptocurrencies as well. So if you want a proxy, you want an alternative in a way that you have something that's not as volatile but relatively stable, but the underlying assets inside of it are cryptocurrencies, then DAI is the way to go. Fifth one is, this is something that's interesting, and I've been trying to mention this also in the show for quite some time now. Terra or UST. What's so interesting about UST, what's so interesting about Terra, it's backed up by algorithmic measures, it's backed up by algorithmic transactions, and it's not highly connected to or pegged to a certain fiat currency, which it becomes a bit interesting because it becomes decentralized in its nature, and it somehow gets protected. It's off the lenses, in my opinion, of a lot of regulatory bodies, and I think that's one of the biggest concerns right now also for a lot of the stable coins, that there are some jurisdictions that may label them as a security. There are some jurisdictions that, because it has gone so big, there might be a need for regulation. People don't know how to regulate it yet because it's not really a fiat currency. So who regulates it? The Fed. It's not really a security. So what does the SEC have to do with it? But there's a lot of gray area, and there's still risk of the government stepping in, especially for those that are fiat backed. Just want to share from my own personal experience on what I actually do. USDT still is the largest, and given that it has the largest, it has the most currency pairs, and it's the most liquid. Since it's the largest, it has the most currency pairs, and it's the most liquid, it's easy for you to transact to other altcoins. It's easy for you to transfer to other exchanges. Most likely they have it. Most wallets support USDT, and it's easier for you to be able to trade with a very, very good spread. Please remember, the more liquid it is, the more prevalent it is, the more used it is, the spreads and the cost on your end is not as high, and it's easy for you to be able to swap and trade. Unlike other stable coins that don't have a lot of pairs, you would have to move them from one token or coin to another to be able just to ultimately buy the token or coin that you want. But what I've noticed from looking at so many wallets and looking at so many exchanges, majority of them use USDT. So if you want something that's universally accepted, or at least used by almost a lot of people in the crypto space, USDT is the way to go. For me, I would use it as an area that if I want to buy something already, or if I plan to use it for a particular trade and not really store it, it's more transitory, I leave it in USDT. So meaning, if I already intend to use that amount of money or that amount of crypto for me to buy other crypto already later on, I leave it in USDT. For the ones that I want to store for the long term, meaning I want to use this USDC, I want to use this BUSD as an area for me that should the market drop, I have something that I can draw from to be able to use, or should there be an opportunity to buy something that's lower, I have something stashed for the long term to be able to buy for me. And that's where BUSD, that's where USDC will work for me. And while I'm not using them, you could actually stake them. You could actually put them in some platforms that can give you a rate of return as well, as long as you leave it there. In the same way also, what you can add to all of that, you can look at UST or Terra. At least it somehow gives you a level of stability also, but it insulates you, it hedges you, it protects you from whatever regulations that may happen to other stable coins that are highly connected to fiat. So in other words, it's nice to have a good combination of all of them, because primarily they also have their own pros and cons, and it doesn't mean that if it's the most liquid, it has the most currency pairs, it's something that you put everything there. At the end of the day, it's all about allocating properly based on your level of conviction, allocating properly also to protect yourself. And please do remember this, I've been saying this over and over, we cannot control how the economy will be, we cannot control how the regulators will actually act, we can't control also how the market is, but we can control how we manage our risk and deploy our capital. So that's why I'm actually more comfortable spreading it into all of them. What are stable coins for me? It's an area where you can park your cryptos so that you are not hit by volatility. It's a way for you to park your cryptos so that you don't have to be scared should there be any market drops. It's a way for you to also park it, but in the same way, use something that's universally accepted. And what's interesting about that is if you're using certain stablecoins, for example, BUSD, you can use the Binance Smart Chain to be able to transfer, and the cost for sending out that cash is literally very, very low. So if you want to use it as some sort of medium of exchange, or you want to look at it from a remittance standpoint, you can actually use that stablecoin and use it to a very, very cheap blockchain in terms of transactions, regardless if it's the Binance Smart Chain or regardless if it's Tron. As long as it's cheap and you get to send it at lightning speed, it's something that's very good. And it's a very, very good way to peg a price, because when you say, okay, send me 1 Bitcoin or 1 Ethereum or 1 BNB, you don't know what the value of that will be 4 months from now, 4 weeks from now. But when you say, okay, let's agree on 1,000 USDC, 1,000 USDT, or 1,000 USD, at least everyone is already in agreement, and then there's no fear of somehow you might lose your value. It may appreciate higher than that, or it may appreciate more than that, or it may actually depreciate because it's pegged to a certain price. I think that's one way also for you later on, that should you want to spend your crypto, it's a very, very good way for you, that from altcoins to a stable coin, and that stable coin will allow you also to somehow either send it to people or to purchase stuff as well. What I think about this is that stable coins will be a staple, because it allows people to enter the cryptocurrency market, get yields that are higher than traditional bank products, in a way also are protected from volatility. And I want to say this to a lot of people who are a bit scared about the volatility in crypto. How do you get exposure to crypto without getting scared about the volatility? Try the stable coins, then try to put them into mechanisms or programs that can give you a fixed rate of return that's relatively safer and less volatile. When you are a bit comfortable already, that's when you start trying other altcoins or start deploying capital into Bitcoin, when you have already taken the time to study it. So I'll say this over and over, don't just buy the stable coins just because I talk about it. Do your own research, do your own due diligence, because at the end of the day, what will make you prosper in all of this is something that you have decided on based on the information that you have and based on the conviction that you have, because the conviction that I have is different from the conviction that you have, and that's why you must take the time to be able to study and to actually learn what it is. If you want to learn more about this, check out the description below. We have tons of videos about it. If you want to invest in cryptocurrencies, check out the links below. Check out Binance, as it allows you to actually trade and buy cryptos for $10 only, and you can open it wherever you are as long as you have a phone and internet connection. It's something that's easy to do, so check it out in the description below. I have NFT projects also. If you want to support my work in the NFT space, check them out below. And I guess that's it for now. I hope that this is something that's valuable for all of you, and this is something that will help you to understand the rudiments of stablecoins as well. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.